Good evening, everyone. Welcome to Asura 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the specific area of ABFM, Advanced Business and Financial Management. And this is our YouTube channel, JAIIB CAIIB English Medium. Everybody, I hope you're all doing fine and Diwali, the festive season is just about to begin. So I hope you are all set for your festive season and your studies because this is the time when you can actually sit down and study because you are at your place. Along with this, this is a time when you can enjoy. So how do we enjoy and study together? That's one of the areas when you study online. This is one of the benefits of studying online that you can do both the things together. Okay, everyone, starting with this particular area, let's start with our session today. This is our series of 3000 plus MCQs. Everyone, let's talk about the question there. The first question says, what distinguishes a foreign currency bond FCCB from a standard convertible bond? Acha, what's the difference between foreign currency bond and standard convertible bond? FCCB. When we talk about the foreign currency bond, it is associated with foreign currency, right? But when we talk about standard convertible bond debenture, the debenture means any particular debt instrument which can be converted into equity, है ना? This can be converted into equity at a later stage. So when we talk about this era, it is issued only in India and denominated in rupees. It is issued outside India, denominated in foreign currency. It is issued in India and can only be converted partially, or it does not allow any conversion into equity. The answer is it is issued outside India and denominated in foreign currency. This is how we define the term FCCB, foreign currency convertible bonds. The bonds which can later on be converted into equity, everyone. Done. Chaliye. Now let's move on to the next question, everyone. Uh, this is a question on hybrid security at ABC Corp. ABC Corporation, a multinational company, has recently explored various options for raising the capital and managing the risk. The company has been considering the hybrid securities due to their unique advantages, such as higher yields, reduced market volatility. ABC Corporation believes that hybrid securities can diversify the risk profile and offer investors a regular return with less volatility than regular equity. After reviewing different types of hybrid securities, ABC Corporation has chosen to issue convertible debentures and preference shares. The preference shares offer a fixed dividend of to the shareholders with priority over equity shareholders for income and the asset claims. The company has decided to go with non-cumulative preference shares, which means if a dividend is missed, it does not accumulate. When we talk about this particular, no, this is there's a in the last point I would like to add. The cumulative means to collect something. If we do not collect something and we keep on making it every single year, and if I'm not able to give you the money in any specific year, that would be collected and given in the next year. But if I'm able to give you dividend in the year one, okay, it's good. In the year I can give you the dividend, it's cool. Then if I am not able to give the dividend in the third year, then in the fourth year you will receive dividend for the third year as well as fourth year together. This is called cumulative, everyone. This particular area is called cumulative preference shares. Done, everyone? Okay, let's look at the questions there. Which of the following was not cited as an advantage of hybrid security by ABC Corporation? Everyone, among the following, which is actually not an advantage of hybrid securities? What's going to be the answer, everyone? When we talk about the specific area of hybrid securities, this is basically hybrid is what? Extreme ends. Your one end is there is equity, the other end is pure debt. है ना? Pure equity and pure debt has a midway, which is basically our hybrid securities. So this is higher yield than traditional debt. Then the next part is lower transaction cost is there. Then the next part is your less volatile market price or risk diversification, everyone. which is not seen as a hybrid security uh, advantage. When we talk about the specific area which is not looked at by them is basically lower transaction cost. We say in actual the particular cost in this case just keeps on varying a lot. So that is what even I can say. This is one particular area. Lower transaction cost is not something that you will find even. Then everyone, chaliye. Now let's look at the question there. Which of the following is a common disadvantage of hybrid securities, everyone? Highly volatility in the market, है ना? Then next part is the complex assessment of returns or no regular return to investors. Which I cannot say there is a regularity in return or non-regularity. That's not something I can say regarding the disadvantage. So basically one of the basic problems of this is they are complex assessments of returns. They make returns and yes they make good returns as well. But that is something which is quite difficult to assess. It is very difficult to anticipate that yes, such a thing can happen. Done, everyone? Chaliye then, let's move on to the next point. Which of the following hybrid securities used is if they wanted to issue securities in a foreign currency? What is the type of type? Different types of hybrid securities exist. One of the different types of hybrid securities is your debentures and even the preference shares. Foreign currency convertible bonds are also one of them. है ना? So when we talk about this specific area, what are they saying? They are saying that which of the following types of hybrid security could ABC Corporation use if they wanted to issue hybrid security, convertible debentures, preference shares, warrants, or foreign currency convertible bonds. Acha, in case of ABC Corporation, they didn't want to keep a lot of risk. They want to reduce their risk, है ना? In this case, everyone, what is going to be the answer there? In this case, ABC actually thinks that yeah, hybrid securities are way better. You know, they are thinking that it is way better in this area where they talk about this in terms of risk profile. This diversifies a risk. At least we minimize a risk by putting into multiple areas. And yes, it is less volatile as well. And you make earnings every single year, right? So when we talk about this area, they're looking at debentures and preferences because of this reason. So in this case, everyone, what's going to be the answer? The correct answer in this case is foreign currency convertible bonds. They talked about FCCB in the particular point. FCCB is basically foreign currency, the bonds which can be converted into currency. Danji. Next question. Which of the following is true regarding preference shares, everyone? Preference share capital under the Act of Companies Act 2013. Everyone, what next? Which of the following statements are true regarding preference shares? Equity and debt. These are two extreme corners. That means either you use your money or you use outsiders' money. But what if you are using both the money? Matlab, this is basically when we talk about the specific area of the preference shares. Preference shares has got a few benefits of equity and a few benefits of debt. है ना? So preference shares are entitled to dividend only after equity shareholders receive their share. Does it happen that way, everyone? Then preference shares can participate in addition additional dividends beyond their preferential right if specified. Preference shareholders have no right in surplus assets during winding up, or preference shares are automatically converted into equity shares after a certain period. ऐसा कुछ नहीं होता that we can say that preference shares would be converted into equity. There is no specific point that you can convert it into equity. Everyone, everyone, when you talk about the preference shares, these people get their money before them. Preference shares can participate in additional dividends only if they take up the specific area of new surplus. ठीक है ना? They are called participating dividends when they get this money. Next part is preference shareholders have no rights in surplus. They can have in terms of even winding up, because the point is they are beneficial in terms of the specific area of preference shareholders have the right to receive the funds before equity even when the company is dying, everyone. Then comes preference shares are automatically converted to equity. No, this thing doesn't happen. Only the convertible ones are converted. Otherwise, they're not. The correct answer is B only, because they say that when we talk about the additional, what happens is preference shares can participate. This is where we talk about participating shares, everyone. Done? Chale. Now let's move on to the next question, everyone. Look at this part. These are the different types of preference shares and the characteristics are given. Everyone match the following. First part is cumulative preference shares. What do you mean by cumulative preference shares, everyone? If I have to define, accumulate has been taken from the English word accumulation. Accumulation means to collect or to gather. You know? So when we talk about this area, when you collect your dividend, and if in case you are not able to pay in 1 year, in the next year you pay the entire amount. That is to be covered here, na everyone? Shares can be converted into equity at the holder's discretion. nahi. Shares that allow holder to receive dividends that accumulate until paid. Everyone got the point of accumulation there? So can I say with the first one you go with B? Next part is how do we look forward towards participating preferences. Participating means what exactly, everyone? Participation doesn't mean dividend. The doesn't mean the area of voting rights. When we talk about the participating preferences are those shares where the particular people have the right over surplus. So in this case, what's going to be the answer, everyone? When you talk about participating preferences, these people hold a fixed dividend? No, they do not have a fixed dividend kind of thing. But yes, what they have is they have the nahi, plus a share in surplus profits. Yes, the answer is D. So can I say 1 is 2 and 2 is basically 2 is D. 1 is B, 2 is D. Everyone, I think when we talk about the first point is definitely not the point, है ना? 1B, 2C. That has to be not the point. If we have talked about 1B and 2D should be there. So technically, what is the particular option, everyone, which is nearer to the particular fact? That is point number B. Done? So in this case, what's going to be the answer? The answer is B only. Then we have D3, redeemable preference shares. The preference shares which have to be paid off. They are called redeemable preference shares. Convertible preference shares matlab the preference shares which can be converted into equity at some point of time. Done, everyone? So in this case, that's the correct answer. Under the Companies Act 2013, the preference shares that are issued for infrastructure projects with redemption period exceeding 20 years must fulfill which of the following conditions? They must be converted to equity after 20 years. They require no annual repayment. The prescribed percentage of shares must be annually redeemed annually at the option of the shareholders, or dividend must not be cumulative. Everyone? What's gonna be the answer? What's gonna be the answer, everyone? When we talk about this at 20 years, whether this is true, this is only in infrastructure companies that this is allowed, and they can have maximum by 30 years. They can go beyond 20 years, but not less than, matlab maximum by 30 years. A prescribed percentage of shares must be redeemed. They have defined that from the 21st year you have to start your redemption process, and by 30th year you have to finish it off. Done now? Done, everyone? Let's look at the next question. An infrastructure project, the preference shares can be issued for more than 20 years if they are fully redeemed. A percentage of the same question is there. Huh? The correct answer is a certain percentage of share which is redeemed annually. Everyone, next point. When we talk about preference shares, they are owned, they are often issued to acquire capital in a sluggish primary market, or preference shares offers investors a guaranteed dividend regardless of the company's profitability. I think when I talk about the specific area of the preference shares, what do they do, everyone? Basic preference shares are issued for all the people who are not looking forward towards equity. You know, that's one particular area that we know about these people, that they do not want to take a lot of risk. So keeping that in mind, these people are always creating the particular area for the, when we talk about these preference shares, huh? The preference shares are those shares where these have a preference over equity, and that's the specific area. You know? Everybody done with this point? What's gonna be the answer when we talk about the preference shares? Preference shares are those shares in which the particular organization has got a preference. Huh? How do we define this preference, everyone? We define this preference on the basis of the first part. Only first statement is true. That means you are actually using it when the market is dead. Only then you look forward towards equity or any other. We do not look towards equity, but we look at the particular areas of my the computer areas in which I can put up. So I think when we talk about the preference shares, how do we define that part, everyone? Everybody, then we talk about the specific area of preference shares. Preference shares do not move very swiftly in that particular share market line. Everybody, what's going to be the answer? Everybody, then we define this particular term of preference shares. Na? This is where when the equity market is not going good. That's why you look forward towards the area of the preference shares market. So in this case, the first statement is actually true. Everybody, now let's move on to the next question. Cumulative preference shares have accumulated the dividend which we could not pay in one particular year. Of course, this is what we said in the first question as well. The next point says that cumulative, non-cumulative preference shares allow the shareholders to claim unpaid dividend. In the first case, it was about having a lot of dividend. In in this particular area, what you can say is your uh, the cumulative preference shares are basically when you have accumulation. You collect it and you give the specific people of equity shareholders and everybody else. Uh, Everybody, when we define the specific area of cumulative preference shares, na, cumulative means to accumulate or to collect whenever we are not able to pay. So technically, in this case, one of the point is only the first statement is true. Second is definitely not true, everyone. Done. Chaliye. Before I end my session, everyone, I hope you already know that we have started with our particular sessions regarding the CIIB crash courses as well. For that, what you need to do is go on to this area. That is our website. That is www.ada247.com. Go on to the area of JIB and CIB. Go on to the area of CIB November 2024. And here comes our courses. Crash course are out, everyone. Planning for the purchase of these courses. All you need to do is use the code Y 541 and apply it, and you can get it for the 3919, and this is for 4 months, everyone. If you're planning, then hurry up and check it out on our website and our app for further details. Stay tuned, everyone. Our sessions are going on every single day, so please keep on learning and keep on growing. Till then, everyone, the sale will end soon, so if you're planning to purchase our courses, then purchase them right away as the time is ticking away. Before the sale ends, go ahead and check it out right away. And happy Diwali in advance.